Hi, and thank you for joining us. My name is Mike Mills, and I'm the managing partner and co-founder of the Legacy Advisor Group. Today is Wednesday, September 3rd, before market open. As a reminder, we record these monthly videos to give you an update on the market, our opinion on areas that may be of interest or concern, including interesting facts, and to make suggestions that may or may not pertain to our entire audience. There are always areas that we'll stay away from, and that includes politics. For this month, I'll give you a quick market update, then give you an interesting fact we've seen with gold and central banks, and finally wrap up with a few reminders. First, the S&P 500 finished up for the month of August, marking the fourth month in a row with an increase. The last week or so of the month was a bit of a flat line with a small increase when talk of a possible rate decrease in September came out after the Fed's meeting in Jackson Hole. Earnings season is pretty much wrapped up, with 82% of companies beating earnings expectations, and the earnings on average being 8.4% above expectations. The 10-year Treasury came down about 20 basis points in the month of August, and has started to climb again in the last few days. Bonds, represented by the Bloomberg Aggregate, are up just over 5% for the year, and international markets represented by the MSCI EAFE continue to increase in 2025. Right now, the EAFE is just up over 24% for the year, versus the S&P 500 up just over 11% as of close on Friday, August 29th. Diversification, as we've been talking about, has been the key this year with a focus on long-term investing. So far, despite having a quick pullback and recovery in the second quarter, this has been a good year for the market, with a 60-40 portfolio up around 8% for the year as of last week. However, we're starting to see some yield chasing and FOMO in the markets, and recently have seen the re-entry of SPACs, all signs pointing to some frothiness. Just in the last few weeks, you're starting to see some pressure building in the government balance sheet, and subsequently investors taking profits from that pressure out of some of the most loved areas like tech. We're not forecasters, but we would not be shocked to see a mild pullback in the coming weeks or months, which we would see as an opportunity to add to long-term positions. We do not believe the market is broken, but after the market and certain sectors have gone up as it has so far this year, you'll have some traders that take profits. This does not mean long-term investing is broken. A few additional things that we are watching closely include the upcoming deadlines, extended again on tariffs. In particular, this is pharmaceuticals on September 29th and the truce with China until early November. The market so far has seemed to take tariffs in stride, but consumers are beginning to feel the sting, and that sting could get worse. There was an article just this week in the Wall Street Journal reminding people that the de minimis threshold started on August 29th. This is the U.S. suspending duty-free de minimis treatment for shipments from all countries, except international postal shipments. This means most low-value imports now face tariffs, and this could cause some disruption in purchases domestically, and is starting to have an effect on international businesses shipping to the U.S. Our interesting fact for this month has been following gold. Gold has been a topic of discussion over the last year. And yes, we have either direct or indirect exposure in many of our portfolios. However, I don't bring this up to talk about the investment. I'm actually bringing this up to discuss what is happening throughout the world. I read a report and saw a chart last week that showed that foreign central banks now hold more gold than treasuries for the first time since 1996. Central banks now on average have about 30% of their reserves in gold. Now, there are a lot of reasons this could be happening. One could be a global rebalancing. Some say this could be a hedge against the dollar, and the bullish side says, you could say we are reducing our deficit, and this is one way to do that. Nonetheless, we find this interesting, and further reading suggests central banks will continue to add to their gold holdings in the coming year. These are all things we're paying attention to, as they could affect global economics. I mentioned earlier that I wanted to give you a few reminders in this video. The first is charitable giving. My colleagues Philip and Karen will be sending out a tax video in the coming months to go over tax changes from the recent tax bill, so I won't go too deep here. My reminder is for those of you that are contemplating setting up DAFs, those are donor advised funds, we like to have these set up by late October, so then you have a few months to fund them for this year. Ideally, a DAF is a great vehicle to gift highly appreciated stock or proceeds from a recent business sale or home sale if you're charitably minded. The next is Roth IRA conversions. As a reminder, the deadline is December 31st of this year to have these wrapped up. If you have questions about whether this is a strategy you should consider, please give us a call. Also, as we talk about IRAs, just a reminder that if you have outside 401ks or IRAs and are of age to take RMDs, that's required minimum distributions, you will need to do this before December 31st, 2025. If those IRAs or inherited IRA accounts are here, we're tracking that for you. Finally, taxes. If you have not already done so, we would like to get a copy of your 2024 tax returns. This helps with our planning for you and your family and making sure that we are making the best planning recommendations possible. If you'd like to send these in, please email Sarah from our team to send you a secure link. Her email is sarah@thelegacyadvisorgroup.com. As always, we truly appreciate your friendship and your trust. And on behalf of the entire team here at the Legacy Advisor Group, thank you. If you have questions or concerns, please reach out. Have a great day.